Ever wondered how the world of numbers and finances work? Welcome to the realm of accounting, the language of business that records, classifies, and summarizes financial information. Imagine it as a symphony, where each number plays its part in creating a beautiful financial melody. The two basic principles of this symphony are the accrual basis and cash basis. They are the rhythm and tempo that keep the financial music harmonious. So, buckle up as we dive into the ocean of numbers, ledgers, and balance sheets. Imagine John, a young entrepreneur who decided to open a lemonade stand. John's stand will serve as our practical example to illustrate the principles of accounting. To start, John buys lemons and sugar. These purchases are his expenses, reducing his cash balance, his asset. He then sells glasses of lemonade to thirsty passers-by. The money he receives is his revenue, increasing his cash asset. Now consider this. John borrowed a table from his neighbor. This table is a liability. It's an asset he's using, but he doesn't own it. He owes it back. And what's left after John's paid for his lemons, sugar, and given back the table? That's his equity, the value that John truly owns from his lemonade venture. Every lemon bought, every glass sold, every table borrowed affects John's accounting records. The story of John's lemonade stand is the story of accounting itself, a tale of revenues, expenses, assets, liabilities, and equity. And just like that, John's lemonade stand takes us through the basic accounting concepts. Now, let's summarize the juicy bits we've learned from John's lemonade stand. Remember how John's revenue was the money he earned from selling lemonade, while his expenses were the costs he incurred to make the lemonade. The difference between these two gave us his profit, a key concept in any business. Furthermore, John's assets, such as his lemonade stand and cash, and his liabilities, like the money he owed for lemons, were crucial in understanding his financial position. His equity, the difference between his assets and liabilities, represented his ownership in the lemonade stand. We also learned about accrual and cash basis. With accrual, John recognized revenue when he made a sale and expenses when he incurred them. On the other hand, cash basis meant he only recognized revenue and expenses when cash changed hands. And with that, you've taken your first step into the fascinating world of accounting. Remember, every business has its own John and his lemonade stand. It's all about the numbers and how we record, classify, and summarize them. Before we wrap up, here's something to tickle your funny bone. Have you ever wondered why accountants don't run marathons? It's because they know the end result always comes down to net income. They'd rather save their energy for balancing the books. Isn't it funny how an accountant's world revolves around balance, not just in ledgers, but in life too? And on that humorous note, we bid you adieu. Until next time, keep crunching those numbers.